My name is Jason Stirbinskis. I'm the Managing Director of Los Cerros Limited. We're listed on the ASX and hold dominant positions in 2 districts of the Mid-Cauca Porphyry belt of Colombia.
Fantastic. Jason, thank you very much for joining us today. This is our second, we've got to admit it, haven't we? This is our second attempt to do this. First time around, I think I was a little bit poorly and I was no good
I
to man
think you
nor
slipped
beast.
into unconsciousnness for a minute there.
It's a true story. I thought I was going to faint twice. Anyway, thanks for coming back. First of all, you're a good sport for coming back after my disastrous performance last time around. But we are here to hear your story. Not heard it before, and we hadn't, apart from that meeting previously, spoken before, and I've not heard the story before, so I'm keen to hear it. Can we start, first of all, what's your background?
I'm a geologist, so I started my career as a geologist, did an MBA, spent some time in management consulting, mainly sort of strategy level, board consulting, those sorts of things. Some time in banking, linked to mining and general banking, and was the general manager of a metallurgical consultancy for a while. So way back when, a recruitment person told me, you've got the trifecta. You're a geologist, you've worked in a metallurgical consultancy, and you've worked in banking. You should be the MD of a junior, and that's been the case ever since.
They're pitching that as a good thing, were they? Blimey. Well, okay, so that's how long have you been involved with the current setup or with the company in its current incarnation?
Okay, well, I was the managing director of half of the story. So I was the managing director of Andes Resources, which was not a listed company, but a public company. And that merged with Metminco in mid-2019. And we rebranded that as Los Cerros to reflect the fact that it was new management and new direction. So it depends on where you say what is the start. So if it's the start of Andes, then it's sort of 2017. If it's Los Cerros, then I was the first managing director of the new entity. Well,
I guess it's Los Cerros really, because I'm trying to understand the sort of the rise, because you were sort of bouncing around a couple of cents. Then no one's really interested. It wasn't a particularly fun market either, to be honest. But I'm interested in how you put the pieces together. I get the 2 companies coming together, but what about the assets themselves? Where did they come from?
All right. Well, maybe if I can rewind a little bit. Being the managing director of Andes Resources, we had a very large footprint in Colombia, but it was all very early stage. So in terms of your textbook project pipeline, we were all at the greenfield and early stage. We didn't have the mature project to talk about. And we had ambitions to list in 2019. And then along came Metminco, which held ground to the south of us, about a tenth of the size of what we've got, because we do have a very significant footprint. But they had advanced projects. They had a DFS at Miraflores and similar. So we thought, well, that complements the pipeline perfectly. They're listed, so we get a listing event out of this as well. And let's see if we can get a deal done. So that came to a head in mid-2019. The first thing we did was to ignore all of the previous work and engage experts that we know from the industry and prioritize all of the assets. So a critical review of all the assets, prioritize them at 2 levels, prioritizing them at a strategy level, what's important long term and where's the potential there, but also tactical. Where do we need to drill first to get some credibility in the market that we're onto something significant? So the quick wins, basically. And coming out of that was a list of prioritized targets, 2 of those being Chuscal and Tessarito. And it was drilling the first hole at Tessarito, which hole 8 in the history of that target. But our first hole was what really created the step change for the company. And we went from sort of 7 mil to 80 mil in the space of a few weeks.
Why would you choose South America or Colombia for that matter? Because there's a kind of and I say in that context of the Aussies give it a massive discount, right? So out of this gate, you've got one arm tied behind your back. So why'd you go for it?
Because of the opportunity. See, there are a few places in the world at any particular moment in time where a country is emerging from a retarded exploration period, whatever is the cause of that. It could be many a thing, but Colombia, for example, it was 40 years of conflict and instability caused by the internal conflict there with the FARC. During that period, not much exploration was being done in many of the areas of Colombia. Now, geologically, Colombia is the same as Chile and Peru and Ecuador. It's the same drivers that lead to discoveries, right? So whilst all those discoveries are in the recent history of Chile and Peru and Ecuador, because exploration was slow in Colombia, they're in the future. So it created this sort of pent up potential after 40 years of not being explored to have some very, very significant discoveries. And that's proving the case. You look at some of the big discoveries of Anglo Gold Ashanti and Buritica in the north and those sorts of things. We're getting multi-million ounce discoveries around us.
Yeah, I mean, I've noticed some of the big players there, and obviously it's a well and down coastline all the way down through Chile as well. So I can see that the appeal to it geologically, but as a business, it must be tough talking to an audience who perhaps don't understand it, don't want to make the time to understand it, and give you this discount. So I mean, how do you work your way through that? What do you need to do to prove them wrong?
Yeah, there's no doubt that Colombia's history is a checkered one. But the major turning point for the country was about 5 years ago when they signed the peace accord with the FARC. And that's when it became a far more far less risky place to be. And that's evidenced by the majors coming in because it met their risk profile as well. So the recent history is nothing like the early years that everyone remembers and perhaps absorbs from Narcos and similar on Netflix or wherever it is these days. But recent history is very positive. And as I said, the risk profile is far better. We've got majors all around us. And for us personally, I mean, the great tick we had 2 months ago now was we raised $20 million, and 10 million of that came out of North America. Two very significant precious metal funds, the biggest of the biggest really, joined our share registry at $5 million each, or slightly under. So that's a big tick and big support that this country is not going through those difficult years that it did sort of pre-2015 or so.
Yeah, it's interesting. I think North America understands South America a little bit better than like Europe or Australians do. Okay, so yeah, big tick. Let's talk about the assets, if we may, because I just want to, given it's the first time we spoke, I just want to kind of sort of broad conversation about all the moving parts, and perhaps if you come back on, we can sort of deep dive into the assets of the geology a little bit more. But for today, you've got a project, Miraflores, which has got some numbers on it. They're good numbers, but it's a small project. So where does that stand in the portfolio?
Yeah, that's spot on. So the model was done on $1,300 an ounce, and on those numbers, excuse me, they were reasonably robust metrics. So we had an NPV at 8% of about 90 mil. So today's gold price is probably significantly better than that, and a payback of 3.3 years. But as you pointed out, it's modest scale. It's 500,000, slightly under 500,000 ounce reserve, grading 3.3 gram per ton. So it's not going to change the world. It's not going to change who we are as a company. It's kind of as Tessarito, I'm sure you'll ask me about Tessarito in a minute, but as Tessarito is growing and has the potential to be many times larger than Miraflores is becoming more of a side act to the main story, which is these big porphyries. Miraflores is not a porphyry, by the way.
Got it. But okay, well, let's talk about Tessarito, because I'm trying to understand how you build this thing out, because there's lots of pockets of information that I've been looking at here, and I'm trying to work out, okay, Tessarito, if that's the name of the game, and you're not cash restrained in any way, what have you got in the bank at the moment?
23 million.
23 million. Okay, so you're good to go. What is the intent with Tessarito? Because it feels like Miraflores is kind of like you built the satellite bit, one of the satellites first, and you bolted back onto the main show. So let's talk about Tessarito. What's the plan?
Well, first of all, Miraflores is an old project. It's been around for a long time, and that was kind of the foundation of Metminco. When we came on board, we looked at Tessarito, and there was two holes historically at Tessarito that I don't think the market really appreciated. One was 256 meters at a gram per ton from surface, and the other was more than 320 or something, rings a bell, a gram per ton from surface. And that kind of fell on deaf ears. But what's really important about those two holes is they're 90 degrees to each other and crossing each other. So what that tells you is that this isn't some desperate director drilling down the same narrow thing twice to get good results. This had potential for depth, and potential for length as well. So you could potentially have this volume here. So we straight away drilled another hole at Tessarito, hole 8, and that was perpendicular to one of those two big intercepts as well. And that allowed people to calculate volume, because now you've got 3 data points at the surface, 3 data points at the bottom of the holes, and you can calculate a volume. And it didn't take the analysts more than a few hours to work out that Tessarito, with that announcement, has become or transitioned from a target to a legitimate at-surface significant gold porphyry discovery. And off we went from there. So Tessarito is certainly the main story. It's a point now where, we've drilled 30 plus holes, closer to 40 holes now. And we're still getting these massive intercepts, 200 meter, 300 meter intercepts, starting on surface, grading 1 gram per ton, some of them grading 1.5 gram per ton. In fact, we put out one recently, the first 36 meters were grading 3.3 grams per ton. So still getting these spectacular hits, even though we're actually trying to find the edges of this thing. We're trying to drill the limits of Tessarito, and we're still getting 200 meter intercepts. So that's fantastic. It's growing. But to some degree, the market's become a little bit immune to these spectacular results. We were talking before, and I said, you put out a 200 meter intercept starting at surface in rural New South Wales, and it's a company maker. We've put out 14 like that, and some significantly better. One of them was 600 plus meters at 0.88. Some truly incredible results. But people are becoming immune to those spectacular results now. So we have a dedicated team focused on target generation. So one of those was Cebal. That's recently surfaced just 9 months ago. That was one rock chip sample, one stream sediment sample, and now we've completed the first round of drilling at Cebal, and we'll have something to say about that shortly. And there's other targets coming up through the pipeline to create the sizzle, if you like. Now that Tessarito has become a known, exciting project.
So how does a company like you play it? I get it. You're 80, 90 million, depending on the day of the week in terms of market cap. You, I guess, move sideways in what is a depressed precious metal market. We'll put that down as a win. How do you play it? Because you can go hunting for targets, which is great, but they're just that. They're targets. They're not discoveries, right? Whereas you've got something which you're describing as a discovery. You've triangulated it, and you can work out the basis of how much contained metal is in the ground there. Where do you spend your $23 million? Hunting targets because that's what's good geologically, or trying to get to some kind of maiden resource on the discovery that you've got and make it meaningful so the market can react to it in the best possible way? So what's the plan?
It's all of the above. Because we've got $23 million in the bank, we can afford to be far more strategic than your typical junior. So we've mentioned Miraflores. I didn't mention earlier, but we're going through the final stages of approval for production, the final submissions for production. So we do have that possibility. I'm not suggesting we would, but we could. So you've got this very advanced
project. What do you mean by production?
production?
Because you're not building a mill with the capex that you. I know it's a small capex.
No, absolutely not. Right? And this, no. We're not. No,
okay.
This is the submissions to have everything lined up such that if we chose to go into development at some point in the future, all of the government approvals are in place. So, no, we're not. I'm not suggesting we're going to go build a plant.
Does that have value for you or someone else? I mean, again, we're just talking about options. What are the options there?
The options to build the plant, small scale production.
Well, build the plant or just get producing, toll mill it, sell it.
Yeah.
What are you thinking about?
Well, that's sort of plan C. So
okay.
Go into production, small scale production, fund exploration out of the production. Yes, that's something we could do. And I think if we weren't in such a strong position, I think that would be the front runner. But we've got the luxury of a lot of money, and we're sitting in one of the areas of prime real estate. We're right in the middle of the most prospective area of the Mid-Cauca Porphyry belt. There's no way a junior would get this ground today. Our competitors have far deeper pockets than us now. So we're right in the middle of this area, massive discoveries around us. You can't focus on a 500,000 ounce reserve and push that when you could be sitting on multiple million ounce discoveries right beside it. So yes, develop Miraflores. Yes. Develop might be the wrong word there. Yes, progress Miraflores. Yes, continue developing Tessarito because that adds more sort of meat to the bone, if you like, calculated mineral resource and eventually and those sorts of things. But also because we're in such a prospective area, we can't just ignore the fact that we've got all these other targets in the area. And one of the things that came out of our deeper understanding of Tessarito is that we know now the structural circumstances or the structural conditions that led to the formation of Tessarito. there's three structural drivers, and I won't go into it unless you want me to, but there are three structural things that dictate why Tessarito is there. And we're looking at all these other places, and we're seeing those three structural things occurring again. Cibao is one of them, but there are others.
Well, tell us about it.
So, sure. Okay. Well, the whole of the Mid-Cauca Porphyry belt, from Buritica in the north right through to La Colosa in the south, and actually going on for most of the spine of South America, you have these north-south faults, major plumbing faults that carry the mineralized fluids. And that's essentially a crumple zone from the oceans whacking into South America. So you've got this north-south line that sort of dictates the major mineralized systems. Where you see the big ones, the big discoveries like Buritica and Nuevo Chicuro, is where those north-souths are cut by a northwesterly structure, usually a fault, but some sort of a lineament that's in a northwesterly orientation. It's a more recent event, so it's remobilized the gold, concentrated it even more. And if you look at the big ones, Buritica, Nuevo Chicuro, La Colosa, and Mamoto, and so on, you'll see that. You'll see a north-south fault, and you'll see a northwesterly running through it. The third is a jog, so a bend in that structure where it's forced to go around something, and that creates more openings in the rock for the fluids to settle and the gold to be sitting in those areas. So they're the sort of the three main things that led to Tessarito being Tessarito. Cibao has all those three. And there's Santa Sofia in our north, which we haven't even talked about. That has the same thing. Dosquebradas has the same thing, and so on. We've got this great many number of targets that could be big discoveries just like Tessarito. So we can't sit back and just focus on Tessarito. We need to develop those as well. We could be sitting on something quite significant. And just to close it out, there's another interesting aspect here that I find quite interesting. It's generally accepted there's a periodicity to major discoveries. So they tend to be equidistant. And this is not unique to Colombia. You see this in Chile, you see this in Argentina and Indonesia as well, I believe. So you look at Buritica, you go 50 kilometers south and you get to Anza. Anza is an underexplored area, but it's a joint venture between Agnico Eagle and Newmont. So that tells you what they think of the area, right? Two majors sharing that bounty in Anza. You step another 50 kilometers and you hit Titiribi, I think is the next one. And then you go another 50, you hit Mamoto, and keep on going down. If you use that periodicity, the 50 kilometers, we're sitting at a 50 kilometer point at Quinchia. So, you just look at that and go, well, it's a very prospective area. We've got the money. Let's make sure we make the most of this.
I'm trying to understand. Look, you've got money. You've got some great targets. Got some great land package there, and you seem to be going about it the right way. But again, I come back to this point about talking to the marketplace. In your case, Aussies, and saying, look, South America's is a good place. It is well endowed. Colombia, things are fine there now, and they are allowing us to get on with the business of mining, and there's lots of big names in there. So that's a nice, easy conversation. The thing that they next come to, and with Miraflores, you've done this, right? You say, the ASIC is $650 for us. The paybacks, less than 3 years based on today's price of gold. All kind of wonderful, simple data that they can go to, right? But with what you're going to have to do with Tesorito is put some numbers on that they understand and can comprehend. And that's going to be maiden resource. Okay, here's a nice scale, a nice size project, which has got the scale that we want. It's just because you put out these kind of long intervals of one, like 250, 300 meters, huge. No one cares. Is that a factor of the market, or the fact that they don't understand the type of mining that you're doing? I mean, what do you put it down to?
I put it down to a number of things. I think, as I said, they become somewhat immune. They expect Tessarito to generate spectacular results, and therefore, when it does, they go, okay.
But define spectacular, because you're never going to put out high-grade headlines, right? So what does spectacular look like to you? What should people be looking at and go, oh, that's spectacular?
Well, this is one of the challenges I have, that when we talk about porphyries, high grade is 1 gram per ton in porphyry language, and that takes a lot of time for people to understand that. We're not talking about underground operations where 3.5-4 gram per ton is what's required. 1 gram per ton is high grade. You look at some of the big discoveries that are being exploited, and they're less than that, 0.7, 0.8, that sort of thing. So 1 gram per ton is considered quite high grade. What we're getting is, well, for example, 320 meters at 1.5 grams per ton starting at surface, right? So 1.5 grams per ton, quite unique, right? Exploiting that or mining that in the future, particularly when you've got a whole cluster of these high grades near surface, that starting area could be very high grade in terms of production. So I think educating people that 1 gram per tonne is quite significant is one of the challenges we have. And just another way of comparing that, right? We put out 2 results in Q1 of this year, the 320 metres at 1.5 gram per tonne, and another one 688 at 0.88 grams per tonne. Now, they sat in the top 10 drill results of any company anywhere in the world on the ASX for about 6 months. And for about 3 months, if we were on the TSX, we would have been on the TSX top 10 drill results for any company on the TSX for quite a while as well. That gives you an idea of how significant those drill results are.
Yeah,
so that's a challenge.
It is a challenge, but it's your challenge. So you've got to accept it and say, right, guys, the reasons why this number matters is because 300 meters at 1 gram, the economics are quite simple. It's about the amount of contained metal in the ground here. There's a lot. And it's really quite efficient to process from surface, right? So that's your challenge that you've got to take up. Do you think you've done a good job on that, or is there just you need a bit more time to get a bit more information to be able to actually present the information properly?
Look, I think we're getting there. I think, and the market's maturing. The market's starting to understand porphyries far better than they did 4 years ago or so. So I think we're getting there and the market's catching up as well. The other thing that helps is that there's references now. So there's a project to our north called Gramalote. That's 4 million ounces, grading 0.7, open pit. You can start talking about these now because that's I don't know if it's actually in full production yet, but it's on that pathway to it has approvals in place and so on. So you can look at that and go, okay, well, 4 million at 0.7 is an economically viable project in porphyry language, and there are plenty of others like that you can now draw on as comparisons.
Right. Let's talk about some of the assets. I get the coming together of the 2 companies. How did you pay for the assets? Do you owe anything? Are there other players involved here who still are sitting on shares or owed cash or any of that? I'm just trying to understand the balance sheet a little bit better.
Yep, sure. Well, there were actually 3 main players, or 4 actually if you count AngloGold Ashanti, but 3 main players in the merger event. There was us as Andes Resources and Metminco. And whilst our portfolios were very, very different, ours was big and blue sky, theirs was small and advanced, we agreed it was essentially a merger of equals, so 50-50 in terms of valuations. Throw it into the mix though, and one of the reasons why Metminco struggled to get any sort of traction in the years before the merger was they held a $5 million debt with Rand Merchant Bank, and that was due last year. So, they got a good result. Anyone who did any due diligence would quickly go, hang on, they're not going to be able to pay $5 million next year. And so the share price would never move, even if the result was good. So that was the third party in the deal. We had to get rid of that $5 million debt, and that's completely gone. So coming out of the merger, the $5 million is gone. The other part of the equation was AngloGold Ashanti. I mentioned right back at the start of this conversation, there was a project called Chuscal, which sits 1 kilometre away from Miraflores and 1 kilometre away from Tessarito. It's a massive surface footprint. That was actually a joint venture between Metminco and AngloGold Ashanti, with Metminco taking 51 and AngloGold Ashanti 49. It was an old asset of theirs that they've entered into us as part of their broader strategy. We approached them and said, look, it doesn't really make sense that you're a minority holder, albeit a big minority holder, but you're a minority holder of one project in what's looking like a hub and spoke model with Miraflores, Tessarito, and so on. It'd make more sense if you were part of the parent. So they became a 2% shareholder, or roughly 2% shareholder of Los Cerros, and we became 100% owner of Chuscal. So in terms of the balance sheet, no, there's no debt, 23 million. And 4 rigs running continuously.
And what's that share registry? And you mentioned like 2 North American funds coming on board for just under 5% each. That's great. What's the rest of the registry look like?
Sure. Our largest shareholder is Lizing Pty Ltd. You might not recognise that name, but you might recognise Dr. Minlu Fu. He's the name behind Lizing. He's a very successful Chinese mining entrepreneur. He lives in Australia. In fact, 5-minute drive from my house. a very successful man, ultra high net worth individual who dove deep into our geology several years ago, came out the other end and became put in $2 million, I think, day one, and has always been topping up as we go through. So he holds 8.5%, something like that. And then we get to the two precious metal funds. It's just under 5%. So 4-point-something%. And then we get to sort of the cumulative directors holdings, which is a little under 2.7 to 3%, somewhere in there. And then, I missed one, Bullet Holding Corp. And now Bullet Holding Corp has been in Colombia for about 40 years. They know everything there is to know about geology in Colombia, and they held a portion of the Andes portfolio. So it goes back through a merger with, or through a joint venture with Bullet, that the Andes portfolio existed. So they're 4%, I believe. And then we've got Anglo Gold Ashanti sitting at 1.67.
And what about you?
And a few other funds in there.
Have you put a chunk of your money in here? I assume this is your 1 gig, right? It's nothing else.
Yeah, that's right. Yeah, most of that 2.7 to 3% held by directors is money in during the difficult times to keep this company alive. There's a small amount that was some performance rights that triggered, given the spectacular share price movement over recent 12 months. But other than that, and that's a small part of that, it's all money in.
Okay. And you attempted at all to do one of these OTC listings, given the North Americans understand South America just that little bit more? Because it's heavily leaning towards retail, it seems, here in Australia.
It is heavily geared towards retail. We've got a long tail on the register. But, as I said, we had these two big North American funds. We have two out of the UK as well. They came on. We didn't need to be listed in North America to do that. And they're certainly far from retail. But having said that, the Canadians and the North Americans understand South America far better than the Australian market does. There's a track record of success of Colombian ventures on the TSX. So, there's more familiarity and perhaps more appetite for a South American play in North America. And that's evidenced by those two funds jumping in. So not out of the question to look at a North American listing at some point. But as I said, we got that North American money coming in without doing that. In terms of OTC, yeah, I see there's a bit of movement in that direction with the OTC. So that's part of the mix. But we're not advanced in those conversations.
Right. Okay. It just seems to me that a lot of Aussies leaning that way.
I've noticed too.
Yeah. Interesting. Let's get back to, in terms of the use of proceeds. You've outlined some of the things that you're going to be doing, and whether it be the targets and moving Tessarito south along. But can we get an idea of timing for these things? Like, if a maiden resource is being worked on, what's the timing for that? And more importantly, what do you think you need to come to market with in terms of scale? Because another Aussie company, a little bit further south, down in Chile, put out a 500,000 ounce or so resource, maiden resource. Market went, no, we don't like that. And their share price has been absolutely hammered. It's a good project, but they didn't appreciate it. What are you going to do? You must be cognizant of those sorts of signals to the market.
Yeah, of course. We have a pleasant problem. It's a good problem to have, in that we keep on growing the Tessarito envelopes, the gold envelopes. So we drill to try and find the edges, and we're still getting 200-meter intercepts and 3 gram per ton on surface and things like that. So we need to know how big this is in terms of the envelopes before we start then looking inwards and start infill drilling. So on the original trajectory, I suspected would be infill drilling and heading towards an MRE, a mineral resource estimate, this quarter. But we're still finding the edges. So I think that's going to slip into next year. Probably the first half of next year, we'll put out a resource estimate.
I guess you've got the kind of luxury of the cash to be able to choose your timing on it. But it seems a very Aussie play to try and get things moving a little bit quicker than North Americans, who do like to find the edge of the envelope, to use your phrase, and maybe show the scale of this. So again, is it the mentality here? Is it hybrid of the two? Is it?
It's a hybrid of the two, exactly. Yeah, and with 4 rigs running, 4 rigs running in Tessarito itself at the moment, we're doing both. So we are doing some infill drilling. We are extending out to the north and to the south as well. And there's a mix. It's not purely one or the other. You can position a drill rig such that you're doing some infill drilling in the first 200 meters and then going out into virgin territory in the bottom 200 meters and so on. So it's a mix of infill and step out at the moment.
Okay. And again, with conditions in country, I guess assays delayed. I hear this every day of the week. Assays are delayed. But tell me about some of the other things that are going on in terms of, some of the applications that you may be making, whether it be titles or other kind of land consolidation or applications for permits, etc. I mean, has that been affected too?
Not that I'm aware of, no, not for us. Although Kinshi is a very advanced project, so we have granted title in all the areas that we're interested in. So it's not as if we're waiting for someone to give us permission to drill. We can drill in any of these targets, subject, to talking to the farmers and those sorts of things. So we haven't really felt it. But in terms of the assays, yeah, absolutely. We get our assay samples prepared in Medellin into the little envelopes, and then those envelopes, the pulps go to Peru. And that process has really slowed down. It's been quite a frustration, but not unique to us, huh?
No, it certainly isn't. But you still need to advance the project as best you can in the best possible way. So let's assume the gold market comes back, that you're in a position to move, with some expediency, rather than sitting around, now we'll press the button to be asking for whichever license you need or whatever permissions you need. So you are, again, because you're not cash constrained, you're getting on with that process. That's what I'm trying to understand.
Of course, yeah, of course. We have a balanced strategy that includes, keeping our eye on movements in the area and those sorts of things as well. But of course, I've got to be cautious how much I reveal there. But, of course, we're watching what's going on in the local area, and with $23 million in the bank and a good reputation with the community, we're in a prime position to make the most of that.
Well, yeah, I mean, the only reason I ask is because we've heard companies come and go, well, given the market at the moment, we'll just hunker down. We'll kind of make sure we're not spending too much money because we just don't know when this thing's coming out the other side. So people have different approaches to this. Okay, you mentioned something there, which every company is mentioning at the moment. They're desperate to tell me about their ESG and their social license, etc. How are things?
Yeah. Look, we're very proud of that. And I think the best measure of that is that it's fluid. The number of people in the company is fluid because we've got teams coming and going as we initiate field programs and such. But let's say on average there's 90 to 100 people in the company. Let's say 100 people in the company. 98 of those 100 are Colombians. I'm not Colombian, obviously, as you can tell by the accent, and the CFO is not Colombian, but everybody else is Colombian. And the vast majority of them live in Quinchia. And the vast majority of those were in Quinchia when we employed them. We didn't relocate them there. They are part of the local community. And that's been great. The success we've had at the drill bit over the last 12 months has allowed us to invest significantly in the community and employ people that through COVID would probably be below the poverty line now if we hadn't been able to find a job for them. So we've done employing 100 people in this time it's been great for the local community and the local economy. And having 4 rigs continuously operating, we're obviously a significant contributor to our local economy as well.
Is it as simple as that, giving people jobs? I mean, people coming on here telling me that their version of what ESG looks like or should look like, and coming up with more and more differentiated ways to stand out. Is it just as simple as just give people jobs?
Well, it's certainly a major one, isn't it? You give someone a job, they feel they're motivated, they're contributing to society and those sorts of things. It's not just handouts and similar. We informally structure our ESG along the lines of the SDGs, the Sustainable Development Goals from the United Nations, and so we use that to trigger some things as well. For example, we just completed, we're in the process of developing a project called Kinships, which is we've taken 15 women from the artisanal mining workforce, young women with families, and we've taken them out of what's quite a dangerous, risky area in mining, and trained them up in all aspects of banana chip production. So we've taught them everything from Banana chips.
Yeah.
They're plantains. They're not actually bananas, so they're more savoury. They're more like chips.
Oh, they're like the food, right? Sorry, for some reason I thought we were going to be talking some sort of heating mechanism, right? Like the plantain. Snack. Okay, fine. Okay, got it.
Yeah, these are fried snacks. And so we trained these 15 women in bookkeeping, health and safety, logistics, marketing, administration, all aspects of running a business, and gave them one of our buildings on some land that we own in the area. And so now they've developed Kin Chips, which is producing snack foods and similar.
Kin Chips. I see what you did there.
Quinchia is the town, and their chips, so Kin Chips, yeah.
Okay, that's good. That's good. I like it.
Their idea, not ours.
Oh, right. I was about to say, if the mining doesn't work out, you go into marketing. It's brilliant.
Maybe.
Hey, well, Jason, I appreciate the kind of run through there. I wouldn't mind getting sort of drilling down, as it were, with maybe one of our technical guys into the project and how you're building that out, because that is kind of interesting to me. The scale and the numbers are good, right? The numbers are good. No one cares. It's kind of a strange one. At some point they will. So again, it'd be great to maybe get back in and sort of see how you're building out that big project, because that will be the flagship, one suspects. But appreciate you coming on today. Let's catch up soon.
Well, thanks for your time. Hopefully 2022 will be a very exciting year, just like 2021. We've got 4 rigs running. We've got $23 million in the bank. We've got a very mature project pipeline from DFS right through to greenfield. So plenty of news flow, plenty of money to generate that news flow.